Hey everybody, I promised everybody a video on Nextdoor and why I think it's an investment opportunity you don't want to miss. I've talked about it in a few other videos kind of on a limited basis, but I promised a full dive, so that's what we're doing right now. Before we get into this, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work I'm doing on YouTube. You'll get some great information there for investors. Again, fool.com/Frankel. So let's dive right in. Nextdoor is the neighborhood-focused social network. It has a really good reach in the U.S. A lot of people don't realize it's a publicly traded company. It hasn't been public that long. It went public during the SPAC boom in 2021 when all sorts of companies were going public, including a lot that didn't really deserve to. But Nextdoor is a publicly traded company. Ticker symbol is KIND, KIND. And I want to share my screen real quick. So here's kind of the stats you need to know about Nextdoor. Here's the reach. 95 million verified people are on the network. At least 45 million of them use that once a week or more. And there is a representative from 1 out of every 3 U.S. households on Nextdoor. It is big in my neighborhood. Pretty much everybody's on Nextdoor in my area. Um, it's not as engaging as, Facebook or Pinterest or anything like that right now. People don't use it quite as often, but that is an opportunity. So I really like this business. I think the progress has been great so far. The stock has been beaten down because of kind of some missteps by previous management. When Nextdoor went public, it was run by a CEO named Sarah Fryer, who was formerly the CFO of Square. In particular, she was the one who really built out the Cash App, monetized it, and did a really great job for that company. So it was really exciting when she became CEO of Nextdoor. It was one of the reasons I bought the stock in the first place. But she really had a tough time pivoting out of growth at all costs mode, it seemed. She really wasn't. When pretty much every other company started pivoting toward efficiency in the 2022 bear market, when interest rates rose and funding became more difficult and things like that, she really didn't. Just kept kind of going same growth strategies, and that really wasn't working. The company really was showing no clear growth and no path to profitability. Fortunately, the Nextdoor's co-founder recently returned as CEO, and the progress so far has been really good. So let me just kind of take a look at this real quick. You can see that Nextdoor's revenue was very stagnant for a while. You can see, pretty flat actually for the past 4 quarters in a row right here. And this is the co-founder came back as CEO earlier this year. You can see immediately made an impact. Revenue growth accelerated to 11%. User growth, which was actually declining for a while, came back in full force. It's up significantly 8% year over year to 45 million. That's the highest active user base the company's ever had. It's still losing money on a bottom line GAAP basis. On an adjusted basis, you see profitability is really heading in the right direction. Barely losing money now on an adjusted basis. Of course, that excludes things like stock-based compensation, which should be taken into account. But the point is, an adjusted loss of $6 million is a whole lot better than the adjusted loss of $19 million, which it had a year ago. So less than a third of the loss of a year ago. The point is, everything is really trending in the right direction. For the full year 2024, management is expecting about 10% year-over-year revenue growth, about 20 percentage points in adjusted EBITDA margin improvement, which, given that chart on your screen, should make a lot of sense. Most importantly, management anticipates that the company will be free cash flow positive in the fourth quarter of this year and will continue to be for the foreseeable future. Now, one of the reasons that previous management was in all-out growth mode was because Nextdoor had a lot of cash, which it got from its SPAC IPO. It went public at a high valuation at a great time. The company has almost $460 million of cash on its balance sheet. And instead of just using that to throw at growth, new management is using that to allocate in ways that will benefit shareholders down the road while still focusing on growth. So the company has a very big buyback plan. They're aggressively buying back their shares. They spent $44 million in the second quarter alone on buybacks. That's a pretty aggressive buyback for this size company. Remember, their market cap is roughly $900 million, so that's pretty aggressive. So let me put that back up on the screen right here. So you can see here's the buyback right here in action. You can see this is the stock-based compensation effect. You can see the total share count went up, 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 and up. And then all of a sudden, management decided to aggressively start buying back shares. And it fell 5%, sequentially, which is a pretty big, big step downward. So I would love to see this continue. There's still $119 million remaining on the buyback authorization. But just looking ahead, there is a lot of room to monetize the platform from here. I'll show you one interesting slide right here about how, where is it? This is one interesting slide. It compares Nextdoor to Pinterest and Snapchat. If you look on this bar right here, this is the daily active user base. Daily, not weekly. Remember, the Nextdoor is about 45 million weekly active users. But if you just look at daily active users, it's at about 16 million. That's compared with about 33 million for Pinterest and about 100 million for Snapchat. And so it does have a lot of room to increase engagement here. And its average revenue per user is about $13 per year per daily active user, compared to $30 for Snapchat and $74 for Pinterest. So a lot of room to boost engagement, monetization, really improve the efficiency of its ad platform. That's a big opportunity going ahead. There's a lot of AI applications to make it a lot more efficient, which it is aggressively pursuing. So really, just to kind of sum it up, I think the CEO change is a very positive one. Nextdoor has a large user base that is engaged, but that could improve. It's already made some very big strides in 2024. Profitability is just a quarter or two away, and it's buying back shares aggressively to take advantage of the low valuation. And I just see a lot of growth potential in this company. I think this is going to be a kind of sleeper stock to invest in over the next few years till people start to pay attention. But if they keep doing what they're doing and keep getting profitability up there and keep growing, keep accelerating their growth rate and keep boosting monetization, this is a stock that isn't going to be under the radar for too long. It's one that I own quite a bit of. It's not one of my largest positions, but as far as what I would call a speculative position, it's definitely one of my larger ones. Love to hear what you think. Do you think I'm making a mistake? Do you think I'm right? Do you like the product? Do you like the social network? I'll do my best to respond to all your comments and questions individually, but thank you for listening. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.